Hey, Bulls. How we doing? The Sherpa's here. The Sherpa's happy. The Sherpa's here with the Sunday game plan for the week ahead. We made money last week. I was wearing the black hat. I'm wearing the black hat. We're going to make money this week. I'm having a great day. Hope you are too. A little hyped up, a little coffeeed up. Just made a great game plan, and we're going to get to it here. So first of all, rainy in Texas, rainy in Austin, Texas. First time in probably 3 months, it feels like. Football season is starting. Fantasy football drafts are getting ready. My bookie's got a little cash down, and I'm ready to go. So hope y'all are too. Remember that I'm a regionally famous sports bettor as well. And if you want any picks, I'll go ahead and throw that in with the Substack. And we're going to just keep the current theme on stocks because that's what I'm the best at. So let's get straight to what we're going to do this week. Remember, it is August 21st, 22nd, little brother's birthday. Shout out Nash is tomorrow. We're just going to have a great one trading. This shit is easy, and you're about to see why. So here we are in the game plan. Hopefully y'all can see this. Let me do a flip back. Yeah, you can see that. All right, so right now the game plan. TGT. Remember last week I called exactly what is happening here with Target. I didn't buy. If you're a subscriber to my Substack, you'd know because you'd get when I buy those things. So go subscribe to the Substack. $20 a month, $200 a year, 1 week for free. If you go sign up now, and I'm really doing a membership push here. I lost a lot of customers off of a bad trade a couple of weeks ago, and that is rare for me. So let's get right on it. Remember, strong buy on the TGT, which is Target. I told you they were going to miss earnings. That was going to drop the price, and that was going to give us an opportunity to buy it. So we're doing that this week. I have an AMD bullish call option for you guys. Freeport McMoran FCX. Y'all probably remember trading this last year and making a double bagger, 200% on one trade, middle of last year at the beginning of all of this, as well as options on it. And I'm going to do a couple of months stagger options on it. I'm going to tell you why. And then also short Mara. So this is for the Substack only. I didn't plan this, but we're going to write that in here because this is just going out to my Substack Bulls. And Bulls, are y'all ready to make money this week, eh? By the way, you're welcome on ERX last week. You are welcome. You're also welcome on AMC last week. This meme stock madness, as I called, is the easiest thing to trade when it comes to overbought bubbles on stocks that have a 3-year target estimate at $20, like Bed Bath & Beyond, that I saved a couple of good friends out there from buying right at the worst time. So happy about that. Always happy to help you, Bulls. And that's just the value you get. So this trade was just too easy on the AMC. We cashed that one out. I cashed it too early. I don't know if y'all followed. Maybe you got that email later in the day and made even more money. Maybe you just decided to not follow what I said and hold it even longer and then made even more money. I believe the AMD call we bought on Thursday last week is going to have it. It's right now, even with the price drop, it's about a 30% baked in profit, especially given the time value that we have on it. So I feel great about everything. I hope you do too. Here are 5 reasons the stock market may run in the news. Grew up, my only father wants me to inherit the phone. Who gives a shit? Your funds in crypto are not FDIC insured. Of course they're not. Also, FDIC insurance is not what it's all cracked up to be. In my 14 years as a financial planner, account executive, and manager of over $1 billion, I do not think that I ever once tried to sell the benefit of FDIC insurance. I more sold against it because if customers really understand what it is, if things got bad enough to need it, you would be less concerned about what's going on with your money and more concerned about where your bullets and your food are. Hedge funds pile a big bet against the S&P. S&P snaps, and then NASDAQ both snap win streaks. Yeah, we can't have nothing but ups and nothing but downs. This is the French fry effect. This is a really, really, really cool article. And y'all know that I always shit on traditional mainstream news. I've heard this story told as an anecdote, and then I see it here as an anecdote about the fry attachment rate. I left the article in here, but the real simple explanation, I wanted you guys to read this. This is a nice little fun fact, a little tidbit for the financial advisors who follow me that suck at their job. Remember, you can use this with your clients. You're welcome. I'm all about giving here. But basically, within economics, there's kind of micro trends that happen. And one of the micro trends that happens with CPI is called the fry attachment rate. And you guessed it. It's what we have the CPI, which is a basket of pretty much meaningless goods that does a pretty terrible job at determining what inflation is. I like to use the spread on the 10-year Treasury and the tip or the Treasury inflation protected security to determine inflation, and also just see it in my wallet. So this one is kind of a neat deal, and it makes perfect sense as far as the behavioral economic theory goes, and that's that the company Lamb and Weston, which is the company that produces all the potatoes for McDonald's fries, knows that there's a trend in behavioral economics that consumers do not actually go out and to restaurants less. And considering McDonald's a restaurant is not even particularly the best idea, that's a pretty touch and go judgment in my opinion. But regardless, is that they don't go out less; they just get cheaper when they do go out. So you may not be getting the $2 double guac add-on at Chipotle. And the same theory here is that there's a noticeable effect in inflation hitting true consumer wallets in true spending based on the stock price of the company Lamb Weston, which makes the potatoes for all McDonald's. And it goes into the fact that this fry attachment rate has not dropped yet. The idea is that people are still going to go to McDonald's, considering a restaurant again, but they might not get the extra fry on the side or the fries to dip into your milkshake. That's like a complimentary good, or even like a non-discretionary item, right? Like we always talk about non-discretionary always leading with tech. So if we see this sell off, non-discretionary leading with tech is something that I themed a whole bunch middle of earlier this year on my sector swing trades, and it works perfectly. So it's kind of a clear indicator that we can add to the list, as well as housing starts, automobile sales, interest rates, the Case-Shiller Index, the University of Chicago Sentiment Index, and all the other indices. We can add the fry attachment rate on there. And the gist of this article is just saying that it doesn't matter, particularly right now, that it hasn't really come into full play. Anyway, moving on. Sectors, one-day sector. This is on Friday. The worst sector is discretionary. I cut out the rest. But the main thing, 1 week, consumer staples was up, utilities up, energy up, everything else down. And service materials, real estate, and financials were the most down. Not the big surprise. The market was basically bouncy and flat. What I like to see is that the 1 month energy and utilities and industrials, top three. Keep that in the back of your head for a second. Bottom, healthcare, consumer discretionary, financials still in the middle. FAS and financials are still going to run. Notice I haven't sent out a sell on that FAS that we bought. So keep in mind this top three: energy, utility, and industrials, right? Commodity-wise, oil is coming back. We're at 89. We found the bottom. We're going to hit 90, 95, even 100, in my opinion, in the next 2 months. It's twice as likely that we hit 100 as it is that we hit 70. Therefore, I'm continuing the ERX trade. Feel free to buy a call on that one a month out. I'm probably going to do that since that was in my last week's Substack. If you want to learn more about that, I'm not going to lead all of these cheapos that don't pay on to what that trade is. But ERX bullish long term, that should be enough. And then crypto, hell in a handbasket. Y'all know that I lost quite a bit of money and quite a bit of subscribers based on the short Riot call that I put out, I called that you should buy puts on Riot, and it went up, and now it is going back down. And remember that Riot is a Bitcoin proxy, so is Marathon, so is SOS, so is HUT8, and straight up easy money coming up in a short Maya. Go out a month, short Mara, that is, and go out a month, because this crypto base that they thought they had at 25 is going down to 21. The real base is at like 19,500. And it'll go lower than that when the next round of inflation numbers come out middle of next month. I'm very confident on that one. I would unload the entire house if I hadn't already lost it on a crypto trade. So I'm once bitten, twice shy. But the fact is that you got to be a dog here. And I'm not scared. I'm going to go short Raya. I think it's easy. Short Mara. I think it's easy money. Go out a month. Trades, long call, all out buy shares of AMD. I sent out that article or that trade alert on Wednesday or Thursday of last week. I think it was Thursday of llast week, telling you guys to sell, to buy that call. If you hadn't bought that call, here's your sign: buy that call, because it dropped 3.11%. It will be up in the time horizon of that call. And if you want to know what that call is, if you're a new viewer, go buy my Substack and you can see every single trade I've made in the past since it started last October, and even more so how good I am at this. But if you look at this chart here, AMD at 95 for a stock that was fairly valued at the beginning of this year with an uncertain economy, somewhere between 125 and 160. Remember, where were we this time, this October and this January of last year? We were more fearful of the market then than we are now. And we had supply chain, we had China, and we had Ukraine, and we had semiconductor shortage, and we had lithium hydroxide, silicon, all of the inert gases and metals essentially were harder to get than they are now. And AMD is absolutely being sold for a song right now at $95. So I don't really give a fuck what anybody out there says. If you have a disagreement, come talk to me about it. I'd even love to put it on my Substack, but I don't get a lot of hate back on these AMDs because I'm not wrong very often on these. Same with NVIDIA, a little bit more. I'm more of an AMD guy because I'm an Austin guy, because I'm a tech guy. And also just simply, they are so much more efficient in their server stacks and some of their supercomputing capabilities from a cost perspective. There's a little bit of institutional backing for a company that seems to have, not that it actually matters, but seems to have a little bit better efficiency as far as energy consumption. What a crazy world we live in, right? So to see what this trade was and to see about that ERX, go subscribe to my Substack. This is the best deal on the internet. I'm tired of telling you guys. I'm tired of yelling at you guys. But I'm going to stay here. I'm not fucking going anywhere. I'm climbing to the top of the mountain, and you're coming with me. And I make it very, very, very easy for you to learn from all the trades that I've made over the last 15 years, 14 years, all the professional knowledge that I have. And straight up, I'm giving you almost all of it for free. Show me some love, and you can actually trade alongside me. Anyway, moving on, I also called the target missing earnings. Check this shit out. StockTwits, horrible website, horrible newsletter. They don't give you any opinions. They just tell you what is going on or tell you what happened. They're kind of for the very, very elementary investor, but they do put out decent information at times, just not opinions, right? So the information that they came out with was absolutely exactly what I called in my video last week, that I said eye on the target as a little pun. Target earnings missed by, what's that? Almost 50 cents a share, right? So they missed by half, and their revenues were in line with expectations. So they are losing money. Why are they losing money? Because they're trying to do the push on the web. They also didn't bullshit the numbers. Here's the second part. Apparently, they didn't learn from Walmart's earnings management tactics. This shit irks me, guys. When including lower guidance enough to beat it. So what that's saying is, hey, just lie to the public, say that you're not sure, or fluff the numbers a little bit, like we're some type of Chinese company where that shit is encouraged, so that they are easier to miss by less or easier to hit. Target didn't do that. I consider that an act of integrity. Also, just straight up, every single one of you guys, what happens when you move into a new apartment? You go to Walmart and buy things. You go buy a shower head. Do you go buy a coffee table or a desk for your new office in your new house? Regardless of the spectrum on cost and price, people don't go to Walmart to spend large sums of money. If you're cheap enough to want to go to a Walmart, then you're not going to be discerning regardless of how the economy is doing. Whereas the thought that Target wouldn't is pretty asinine. Every basic chick I know, every basic dude I know, every old man I know, my old parents I know, the old parents you know, Target is a mainstay and a staple. They're not going anywhere. Their push for online is going to work. And because they were honest, they didn't bullshit their numbers and try to gaslight Wall Street. They're going to have a big bounce in the next month or two, probably week or two. I would put this out there as a LTC long-term hold for your IRAs. If you're interested, if you're looking for a good stock that is going to be economically resistant, that's also depressed in price due to this earnings miss, very good internal rate of return on this guy. And what I'm going to do is I'm going to buy individual shares in my in my brokerage account. And I expect this to probably make at least a 15 or 20% run up in the next 2 to 3 months. And I'll potentially then start writing calls against it. So if I'm selling calls against it, then people can call it away from me at a profit. I'll have an internal break even. And if it continues to go up like I think it will, I should be able to make that 10 or 20% or 20 or 30% over those 2 or 3 months into more of like a 40 or 50% based on selling those calls and premiums and getting really aggressive in collecting premiums. So that's a strategy that no one else on the internet is telling you. No one is showing you. And if you actually do this and you follow along and you pay for my Substack, $20 a month, you can text me, call me. I will walk you through how to do this. I'm here for you, bulls. There's the chart, by the way. You think that Target, probably the biggest consumer staples company slash home decor slash consumer non-discretionary staple company out there, is going to sell off from 240 to 180 because these numbers, it's just asinine. So if you're not with it, I don't want to hear you bitching when you're losing money trading. Finally, did you see the sectors list earlier? Did you see the sectors list earlier, bulls? What was at the top over the last month? Industrials, energy, and utilities. What does all of those things? Freeport-McMoRan, FCX. My bulls are going to love seeing this one on there. I don't think we've ever lost money on a trade with this one, not even for a day. So buy the 30s at the money calls and buy them on October 21s. So here's the theory here. This is how I'm going to trade this. I'm going to buy the October 21s and the November 18. So I'm going to go out 2 months and 3 months respectively. The idea here is that if I get lucky enough to have a down day in FCX tomorrow, I'm going to buy the longer ones. These are going to be cheaper and I'm buying more time. And I'm probably going to put, let's say I was going to make a $10,000 trade on this. I would probably put $7,000 into this one. And then I would wait. And the next day, if I get even lucky enough, again, I'm going to buy the at the monies in October. So what I'm really saying here with the other three, what I'm really saying here is that I'm as certain, roughly certain as I could be on this, like 85% chance winners, 90% chance winner, I believe, over the next 2 to 3 months. But I'm still going to take a little bit of a safer approach on it. And the safer approach is to buy out the longers on a down day and then hope for another one to buy the shorters. But either way, I'm buying these. I just want to deploy it with some type of time value massaging. I don't think I explained that very well, but go ahead and do it and you'll kind of get what I mean when you see the prices move. If it's up tomorrow, I'm just going to go with, on Monday that is, if it's up, I'm just going to go with the October 21s. Y'all with me? I think you guys get it. This is kind of the way we sold straddles back in the day. Bought straddles a couple of weeks ago, a couple of months ago. But we're really just expecting volatility on both sides. I just want to see if I can finagle a better price and more time value by buying the longer ones. And then the final one is short Mara. You know what to do. Short Mara, Marathon Patent Group, short it. And if you want that trade, you'll have to subscribe to the Substack and look back on the previous trades. It'll also give you confidence in how good we are at this and how much we've really grown our own trading. Guys, please subscribe to the Serpa.substack.com. This is my livelihood. This is what I do. This is my favorite thing in the world. I am one of the best in the world at it. I put my name out there. I put my reputation out there. I walked away from a career in this so I could teach you. I'm impassioned. I'm emblazoned, but I'm also impeccable at doing this. And join the hundreds of traders making the right move and learn from the best. $20 a month, $200 a year. AFG, LFG, LGR. Let's get rich, boys.